What's up, guys? Freaking hard time starting the stream. I'm not gonna lie, that shit did not want to work out. Hopefully, you guys are doing great. I am doing great despite taking a loss today. Fortunate, but it happens. Definitely happens. So let me just do that right here. All right. So you guys know, uh, we went to Miami this week. So didn't really look at the chart too much. I was really more focused on having a good time with the team and building the vibes rather than looking at the chart too much. I'll go over the trades of the day. What I saw was a good trade, in my opinion, and we could have potentially caught using a framework that I show. Then we're most likely going to do just pure backtesting session, let's say backtesting tournament, rather than explanation and Q&A. So what's up, guys, in the chat? I'm just going to wait a little bit. I'm just going to do this this announcement right here. Right there, announcement. Let me just go on Twitter because... Yeah, basically I had a hard time starting this stream because uh, I couldn't see the event, basically. I don't know if I was tripping or not, but what's up, guys? Yeah, I couldn't see the event, so all right. So I'm gonna be giving away yeah, two 50K growth accounts like usual. So we're gonna do it. I don't even have bar rigs on this one, but we're gonna do it um with the numbers thing that I usually do. So make sure to like the stream, subscribe to the channel, and we're gonna do the 250K growth account giveaway if we get 60 likes. All right, more people are gonna jump in the stream, but for today, we're gonna start with a little trade recap of the day. I took one trade, one loss. Looking back at the day, there was multiple opportunities I could have potentially caught. It was a trendy day, and usually these are my hardest kind of days. I'm not gonna lie, these days are the worst for me because I always feel like longing in premium is not the play. So I try to look for pullback plays here towards those imbalances and looking for some sort of pullback plays. But in a day like today, which only happens around like 20% of the time, you're most likely going to get caught up shorting a bull market. All right. So what happened today? Let me just go over the trade that I took. So we formed a really, really nice range right there. So we formed a really nice range here during the PM session. Okay, so this was the 4-hour high. We swept it. ES couldn't sweep the high, so we created an SMT with NQ. So NQ created a higher high, while ES created a lower high. Okay, so this first of all is a big confirmation that price is most likely going to create a reversal. Then after we swept the high, which was the 4-hour high, into this 4-hour for value gap, I knew that if I was looking at buys, basically, I would have wanted to see that candle close above, firstly, 52, and second, 61, okay, if I was a buyer. And right here, that candle told me, hey, Amos, we're most likely ready to go short right now. Those buyers are being squeezed. Those sellers are starting to be aggressive. Wicks do the damage. Body tells the story. So then I went down to the 1-minute chart, found out my model right here, which is my breaker block. And unfortunately, I entered inside the breaker on the pullback right here and ended up getting squeezed. All right. So that was really unfortunate. Nothing to learn about this trade, which is kind of crazy to that sounds crazy to say, but not every loss will teach you something. It will basically be the fee for you to adapt to certain market conditions, in my opinion. But let's say right here on this play that I took, there's nothing I can learn. But let's say while journaling this exact play that I took, and I usually take, then I will potentially learn something from these next weeks that will these next week of price action, or basically the month or the quarter, okay, to adapt to the market conditions. So for now, definitely um, still looking to take the same kind of setups that got me to my payout, which are really the same kind of setups. But let's go over the trades that you could have caught on last week. Last week, sorry. Okay, we're gonna do some sort of weekly recap so you guys can learn from it. But let's talk about what happened on Monday. So Monday, really good first opportunity that I saw here. Okay, why is that? You guys know I have a framework, which is if there is a 15-minute fair value gap that is being created. Okay, let me just write it down like this. All right, we don't see it in that way. All right, so I want to see a 15-minute fair value gap get created. Okay, as soon as it get created, what does that mean? It means that buyers were way too aggressive, sellers didn't get a fair exchange, so now we will most likely see a pullback. So then it is called a magnet. Okay, I want to target that gap. So then what you want to make sure though is that the next basically the 15-minute candle that just closed and created the gap closed back inside the range of the previous one. Okay, so did the M15 candle close back inside the range of the second candle? Okay, this is what I'm looking at again. And then third one will be M1. Either you have a market structure shift, okay, so a breaker block, the order block, or the IFVG. Okay, this is what I use, and this is what I want to see in order to target this internal gap. Okay, unfilled fair value gap. So these are my rules. This is what I'm going to be looking for this session right here. So right here, first trade, you swept buy side liquidity. Okay, boom, into this bearish fair value gap. I told you guys that the levels that you're going to be bouncing from are pretty subjective in a sense, because you could have easily went back towards 86 and reject. Okay, this is something I always say. The levels that you're going to reject from are not always going to be the most accurate or replicable trades in the long run. So usually I always wait for price to give me signs of aggression on the candle that I'm looking to trade. So let's say here, I know there's going to be an unfilled gap right below me that gets created as soon as this candle closes. So now we have a 15-minute fair value gap that is created, which tells me that buyers were too aggressive. This area has low volume, so I want to target that area right here. Good. First step. Second step, did the M15 candle close back inside the range of the second candle? This is the third. Okay, a fair value gap is a 3-candle pattern where the up wick of the first candle doesn't touch the down wick of the third. Okay, so here we have it. Okay, this 15-minute candle closed back inside the range of the previous one. So second, good. And then we go down to the 1-minute chart, where we do not go down to the 1-minute chart if those two rules are not being respected. Okay, so here I go down to this 1-minute chart, and now let me find a reason. Let me find basically sellers inside that print that will validate my thesis. Okay, so here, scaling down to the 1, what do I have? Okay, time frame alignment is one of the most important thing ever. Okay, because if you're looking at a 15-minute chart, the 1 minute will tell you the story. Okay, but usually what I do is that I do not scale only to the 1-minute chart, because there could be no valid information on the 1-minute chart. So then I go to the 2, I go to the 3, and I also look at the 5. These are the time frames that I look at in order to find my entry based on my 15-minute framework. Okay, so let's say here in this case, I will look at the 1, 2, 3, and 5-minute chart to validate if there's any aggressive sellers and if there's buyers being squeezed. So here, going down, the trade was on the 5-minute chart. We had this bullish fair value gap, being created. We had a high, low, higher high, and we created that fair value gap here on this 5-minute chart. If I'm truly bullish, I want to see this fair value gap get held here to create new highs. But if we're bearish and we have an unfilled fair value gap right below us, this is exactly what I want to see. I want to see sellers being so aggressive that we disrespect this gap, okay, on the 5. So the reason why I take this trade, 15-minute candle fails to close above the previous candle's high. We're sweeping buy side. We have an unfilled gap right below us. 5-minute scale down, 5-minute inversion for value gap. This is enough for me to take a trade back down into the unfilled, okay, right there. So here I short. You guys know if I'm trading and I'm scalping like this, I want to be right quick, I want to be wrong quick. So in this case, this is exactly the type of trades that I'm going to be looking for. Okay, so here 5 minutes and you're out of the market. Okay, so let me just do this right there, execution mark. This was the first trade you could have caught this week. On Monday, 15-minute unfilled gap, failure swing here. You go down to the 5-minute chart, you find your reason why sellers are being aggressive, why those buyers are being squeezed, and then you short back. Good. Let's try to find trades that look exactly the same on the 15-minute chart and the hourly chart, and let's try to understand the reason why some win, the reason why some lose, okay? But the main reason why I would take a trade like this is that you only need to predict one singular candle in the chart. I always talk about this. And if you want to predict one candle, then you know that basically if you have this candlestick pattern, okay, that is happening and you have that unfilled gap, you know the likelihood of that next candle closing bearish, okay? You can study that on the chart. You can study that in backtesting. So here, if you know the next candle is going to be bearish, then you could potentially enter on an uptick to see that candle distribute down, okay? This is basically the principle behind the system. Okay, so let me do this so my face gets tracked. Okay, that's better. Okay, because I see Friday's masterclass was so good. I appreciate you, my brother. Definitely gonna talk about Brett to do more board sessions, because the backtesting sessions are nice, but I don't necessarily want to talk only about technicals, because technicals are a big part of trading for sure, but I would say psychology, risk management, and your overall approach with those firms is going to make the difference. How you treat those accounts, how many trades do you take in a day, how do you journal. It's like it's not just about strategy, and I learned that in my journey. You could have a really good strategy, you could be you could have a positive expected value, like your strategy actually generates money in the market, but you have such a bad approach with prop firms and you don't understand some concepts like risk of ruin, like the fact that you can't be using too big of a risk to reward, you can't over leverage. A lot of stuff go into play when you try to get payouts, or at least consistent payouts, and also understanding the psychology aspect of, okay, if I blow an account, it's not that deep. I can go on the next. I'm getting 17x my initial investment, 15x my initial investment, depending on the account that you're getting. These are stuff that I think are extremely, extremely important to talk about and educate people on, and not just technicals, and not just, okay, I'm looking at this and looking at that. No, even if I'm looking at this, if I'm taking 3 trades in a day, I will most likely dig myself a hole, or let's say I will trigger me. Let's say taking 2-3 losses in a row will trigger me, and then I will make a mistake that will be detrimental for my trading overall. So if you guys have any questions regarding anything, make sure to type them in the chat. I love to answer questions, and this is basically what gives me I would say the thing that will really give me a lot of inspiration when I'm talking about trading is the questions you guys are asking. 100%. All right, so let's say here, again, we had another unfilled scenario. Is it the best? No. But you guys see when price is displacing to the downside, we create what we call those fair value gaps, okay? Usually how people will play them is that they will see those gaps and they will just predict that price will hold this level in order to create new lows. Unfortunately, if it was that easy, every single one of us would be rich. In this case, it worked, but it doesn't mean... If you see price reacting to a gap, it doesn't mean that it's a profitable strategy. Okay, make sure to know that. You need to know the reason why price held that gap, or why did it have more chances of holding this gap in this exact scenario. Okay, I don't usually trade this way. What I will do though is I will wait for those gaps to get created and understand the fact that if price sold off too aggressively in that moment, the likelihood of us going back to the upside for a retracement to have fuel, enough fuel to go back down towards these lows, is more than likely. Okay, and then I can look at my rules here that I had. Okay, I took them away. What am I looking at? First, I want to see if a 15-minute fair value gap gets created. If it gets created, then it tells me a lot of information, valuable information for me to take a scalp. If we create a fair value gap, I know sellers were so aggressive, those buyers didn't give, basically, they didn't have a fair exchange here in this level, so this area has low volume, and if an area has low volume, it will retrace back towards it to find fuel. So here, first thing, we created a gap. Second thing, is the third candle closing back inside the range of the second, okay, which is the third candle is this one, which is the one that will create the fair value gap, and the second one is basically the displacement candle. In this case, we are closing below, okay? So why is this not that good of a trade? It's because those sellers, there's more sellers than buyers inside the sprint, okay? We do not have a pin bar, or we do not have a big enough rejection for me to be extremely confident in the fact that we're going to pull back towards this level, okay? So these kind of trades, I would pass on them. I would pass on them, especially if, let's say, you see here, a lot of people would be like, oh, I tried to go for this unfilled gap right here. No, price didn't tell you to go towards this unfilled gap. Why? Because look at how this third candle closed. Okay, wicks do the damage, body tells the story. So in this case, you see a fair value gap is a 3-candle pattern, where, let's say in this case, the down wick of the first doesn't touch the up wick of the third. This candle right here closed extremely hard below the second candle's low, 80 handles below. The likelihood of us opening here, sweeping that low, and going all the way back here is slim, okay? Or even if there is a likelihood of that happening, the chances of you being able to put your stop loss in an area without being stopped out or timing the market exactly to perfection is literally so hard in these kind of situations, because sellers are present inside the sprint. You don't know if you're going to open on the new candle, react to a seller, go all the way back down here, sweep it, and then go back up. Okay? It's really hard to know and time the market in those instances. The moment where you can actually time the market is there. You have more chances of winning than otherwise. Okay? So let's say here in this case, I would pass on that. Okay? Same here. All right. So then I always go on the 1-hour chart to see if there was any good opportunities whatsoever. Here, same kind of thing. Do not see any good opportunities on the hourly chart. So then let's go on the next day, which is on Tuesday. All right, let's talk about this one. This was an opportunity that will happen. It will happen. This exact setup right here, it will happen to you. Okay, and it was just unfortunate. It was a deep pullback, but it was still a valuable trade in my opinion. So what happened here was that you had exactly the framework being respected. You created that 15-minute bullish fair value gap, bearish fair value gap here. In this case, you went down so aggressively that price created a bearish or value gap. So the first candle's down wick didn't touch the third candle's up wick. Sellers were too aggressive. Buyers didn't have a fair exchange here. Low volume area equals a magnet. Okay, you want to see that that fair value gap get filled. So here, you scale down to the 1 minute chart and you try to find a reason on why you should enter. Let me tell you something. There is 2 possible outcomes. Okay, maybe 3. First, price will go to the upside from here immediately and open higher into this gap. Second, price will open lower, find resistance, generate sellers in this market, fake out all the sellers, hold that wick, which is called a wick fill, push back to the upside to fill this gap. This is the second scenario. So first scenario, you just open higher. Second scenario, you wick fill, you hold, and you push to the upside. Third scenario is you disrespect this framework completely and you get wiped out. Look at what happened in this scenario here. Okay, so this right here, why is it dangerous in my opinion to enter in that kind of setup is because when the body is not big, it doesn't tell you a good enough story. It doesn't tell you that, all right, those buyers are truly being extremely aggressive on that candle. Okay, so when you have this, then you could be skeptical about price going lower first. So here, this was a scenario where it was easily, you could have easily taken a loss, and I do not think this was a bad loss. It was a good loss. Okay, here, this candle closed back inside the range of the previous one. You had an unfilled gap right below you. You created that 1 minute fair value gap. You disrespected it right here. You know what? I'm going to try to go long. Stop loss right below this candle's low. Take profit at a 1-to-1 risk to reward back into the unfilled. Look what happened. We get wiped away and price immediately runs towards your target. Okay, this basically it made scenario number 2, okay, which is open lower, form the down wick of the new 15-minute candle, and then push to the upside. Okay, wipe you out, generate sellers inside this down move here at 10:15, 10:16, and then actually be the fuel to push back to the upside. So the more you dig into those scenarios, the more you dig into this model, the more you can learn, the more you learn that you have to stay patient and you only need to predict one singular candle to make money in this market. You don't necessarily need to rush in a setup and you're like, all right, this is the only setup I'm going to have today. No. Okay, there is multiple setups and on multiple time frames that you can take this exact setup. Okay, so here, it doesn't mean that you have that 15-minute pin bar, let's say, and you have an unfilled gap right above you, that you will be able to be profitable. The way that you're going to manage how that next candle will open will, though. Okay, so that next candle will open. It can either go higher, go lower to sweep that low, or go immediately back towards your stop loss. Okay, so can you understand the structure behind why price would do this one? Can you understand the likelihood of us going for number 2? Or can you understand if there's actually a reason why price did number 3? Okay, so not just one possible outcome. You could get stopped out to the T before price actually goes and runs towards your target. So was it a bad play? No, it was an incredible play in my opinion. Really, really good. Just unfortunate timing. Okay, then price ran, had another opportunity here to scalp this unfilled 15, but like you can see here, this candle closed above the previous candle's high, so not necessarily the best kind of scenario. Okay, TJ in the chat, let's go. My brother TJ, he just joined the family here. Make sure to shout out your code there. Maybe someone will buy with your code. But shout out to TJ. He just joined the Tradeify team. And that's a pleasure to have you on the team, my brother. So on that day, not necessarily any good scenario, but the one that we saw here at 10:15. All right. So then I could scale up to the 1 hour chart and see if there was any opportunities. Like you can see, no opportunities here. So then let's go on Wednesday and let's try to find a potential trade. All right. This was not a bad trade, in my opinion. Okay. So here, what do I like this trade? Okay, we literally barely closed above the previous candle's high. We let that unfilled fair value gap right below us. So now this is exactly what I'm looking for. I want to see a 15-minute candle failing to accept price above the previous candle's high, so the second candle's high. Okay, I want to see a big rejection. If the wicks are big, it tells me that there is a lot of sellers present inside this range and buyers are currently being squeezed. Good. Then I want to see if we created a fair value gap on the 15. When we create a gap, we know this area is an area with low volume. And if an area has low volume, we have a lot of chances of retracing back towards it. Okay, to find a one-to-one risk towards scalp back inside this range. So here, when I see this candle close, of course, it's not the A+ setup of the century because we didn't close below 51, but we barely just closed above. Okay, so this is a moment where I would use some sort of discretion. Then scale down to the 1-minute chart, and let's see if this is a good scenario, and let's see if there was good confirmations that price was most likely going to go higher or lower inside this range. So now I know price, look, just purely looking at this 15-minute chart, if I had to guess, I know the chances of us entering into this unfilled gap and tapping this unfilled gap here, tapping this internal low is way more likely to happen than us going back to the upside to sweep this high. Good. So what do I have here? Do I have a good enough confirmation to tell me that price will go lower right now? Yes. What happened? We created an accumulation phase here. We pushed up, creation of a 1-minute bullish fair value gap. What happened? We disrespected this gap and also closed below the series of down close candles right here. Okay, last series of down close candles before the sweep. So here I have two confirmations. I have the breaker block plus I have the inversion fair value gap. So now I could trust the fact that if I enter here, I have enough sellers inside this range to create an open low on the new candle. Okay. People have so much time to lose when you read those comments. All right. So boom, right here, really good opportunity. Unfilled fair value gap, 15-minute candle fills to close above the previous candle's high. 1-minute inversion fair value gap, 1-minute breaker block, and then you short back down towards the target. And you see in 2 minutes, you hit the target. Okay. Why do I like this trade so much? Everything was, the framework was respected, but also when I enter a trade, when I'm scalping, I want to be wrong quick, I want to be right quick. And in this case, it's telling me that the levels that I have marked out in my charts actually make sense and actually are reactive. Okay, so I'm confident in my edge. I know that what I'm trading right now actually makes sense and has substance. It does. They do allow it. Did you have any problems? Because I didn't with Tradeify. Tradeify is making money from people blowing accounts, and you are sitting here learning us how to be profitable. All right, brother. This guy. Basically, how 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 is this guy still in the chat? But yeah, this is the best setup of Wednesday that I saw. Really, really clean opportunity right there. Okay, then okay, so looking at this hourly chart, we can see the same exact thing that happened, and I really like the setup actually. I just didn't have any entries on that one. I was looking at it also with Nick, if you guys remember, but I didn't find anywhere to enter on that trade. But basically what happened on this trade was the same exact thing. So we swept the previous daily high here. If I go on this daily chart, we swept this previous daily high to the tick. And then I know that when I see a displacement candle that is so aggressive, I want to be playing short. Okay, I want to be a seller if we're failing to close above that second candle's high. Okay, so this displacement candle, when I see it, I know that we're most likely going to create a gap when that third candle is going to close. So we have the first one being here, so I do not want to see price trade back into the first candle's up wick. Then we have the second candle closing, signaling that buyers are extremely aggressive. They didn't give any fair exchange to those sellers, so now they're most likely going to be exhausted if we find resistance. Okay, so here, look at what happened on this 1 hour chart. We swept the previous candle's high, swept the previous daily high, and we're closing back inside the range, letting what my unfilled fair value gap. So now every single thing in my framework is being checked. Now I just need to scale down to a 1 minute chart in order to find an entry and the reason why sellers are being aggressive and the reason why buyers would most likely lose this fight. Okay, so here, if I scale down, there was a good potential entry you could have caught using this 5 minute fair value gap, and this is exactly what I was willing to enter on. Okay, to target this unfilled right below me. Unfortunately, look at what price did. We immediately respected this print here on the 5 and went down. So the only potential entry you could have caught was based on let's say this 2 minute fair value gap, but those kind of entries, I usually hate them. I would want to see price entering into a higher time frame gap, let's say a 5 minute, 3 minute at least, to then see price move back down towards my target, which is the unfilled fair value gap. Okay. Do you have a live account with Tradeify? No, not yet. I think I'm like 2 payouts away from getting it though. Not too far. Let me see the chat here. Markets are heavy on me. Last minute accounts these 2 months. It's all good. To be honest, depending on exactly what's the reason why you're losing. If you're losing but you know you have a profitable strategy, it's different. But make sure that if you're losing, it's not because of your psychology. It's not because you have bad habits in the market. If you are respecting your plan every single day and you have the data, you have a folder with thousands of pictures and that is telling you the reason why you should keep on trading the system, the same exact system, the same exact way, then keep doing the same thing. If you don't have all of this, you may need to go back to the drawing board and understand the reason why you're failing right now or you're losing accounts. So yeah. Do you have? I just said no. I don't have any live account. But make sure you know the reason why you're losing. Um, you're losing those accounts in the last 2 months. Is it your edge? Is it your psychology? Do you use discretion in your system that makes you panic in some trades, makes you leave profits too early? What is the problem in your opinion? For me, I took a loss today. I lost around like 4,500. I took right now. It's been 2 losses in a row that I took since I took my payout. So I need to climb it back. Not gonna be too easy, but um, definitely just trading my system and doing my thing. So here again, yet another setup that I saw. So 2 setups that I saw on Wednesday, right here. Okay, so you guys see this displacement candle, second candle right here. So when I see a displacement candle, I know that if I do not trade back into the first candle's down wick, and I also don't close below this second candle's low, and I have this kind of candle forming, okay, I will have an unfilled gap. So right here, this is exactly what I want to see. So now let me scale down. So let's just print this 15-minute candle. Look, swept the previous candle's low. Price is failing to close below this previous candle's low, which is 576. So now I know that the likelihood of us going back towards this internal gap is way more than us going back to the downside. Okay, so here, scale down to the 1, and let's find a reason why I should enter and find longs back towards this unfiltered value gap. Okay, is it the right moment? Do we have the right structure? Are the buyers in control on the 1-minute chart? Or is this 15-minute candle just showing me fluff? Okay, this is always what I'm looking at. So here on this 5-minute chart, okay, this entry was on the 5, and we created what we call a change in a state of delivery, which is when you close above the body of the series of down close candles that created the sweep. So here, basically some sort of engulfing candle. Okay, so here, this is what we have on the 5-minute chart. We have an unfilled on the 15, and on the 5, we're sweeping the sell side, and we're closing right here above the opening price of the series of down close candles that created the sweep. So basically, price did this, and we're closing above this level, which is going to be basically the reason why I should enter longs back to the upside, having my stop loss right below this level. Okay, so here, really good long opportunity, stop loss right below this low, take profit at this height here, okay, the unfilled gap. So you feel it. Let me just go enter in buy limit right there. As you guys can see, in around 10 minutes you hit your target. Of course, the target is not going to be all the way here. How price will push past this 15-minute gap is definitely subjective. You never know when price is just going to rip above it. This is why it's preferable to get out of your position earlier, because when this gap gets filled, you don't know what price is most likely going to do. But you base your trade off of the fact that this gap is a magnet. And when it gets created, you have really, really good information of the market, and you know that the likelihood of us going to the upside right now when this candle closes is higher than us going back down to sweep this internal low. Okay. So yeah, there was this trade, or there was also this one at the close of the market. Same thing, we pushed to the upside right here, accelerating towards this 15-minute bearish for value gap. Then what do I want to see? I want to see if we can fail to close above this second candle's high. Are we doing it? Good. Do we have an unfilled for value gap right below us? Yes, we do. Second one confirmed. So now I have my framework being confirmed just by how this candle closed and what we have below us. So then I can scale down to a 1, 2, 3, 5-minute chart to find the reason why I should take a scalp back down. Okay, so here, what is happening, what was the potential trade you could have caught here inside this range, was definitely when this candle printed down and created that inversion. Okay, so here you could have had that early entry right there at 339, or wait for us to displace below this fair value gap and also displace below the opening price of the series of down close candles before the bullish sweep. Right here is the play. You short, stop loss right there, take profit just at a 1-to-1 risk to reward. Okay, so you put a sell limit inside this, you get tapped, so you can put your stop loss, and then you immediately hit your take profit. 2, 3, 4 minutes and you hit your target. Okay, I want to be right quick, I want to be wrong quick, I want to use the same exact framework every single time I enter the market, so I can sleep well at night knowing that I could do the same thing every single day, and knowing that I can also adapt to those market conditions. Okay, if you have a strategy that is to shit, is it lagging? Was it lagging? Okay, my YouTube was lagging. Well, I thought I just lagged. Yeah, if you have a strategy that is using too much discretion, and you always need to take some sort of decisions, and you feel doubt, you feel fear, it is most likely going to be extremely hard for you to make consistent profits in the first few years of your trading. Okay, in my opinion, having a mechanical system, mechanical approach in the beginning is extremely important, and then you can find intuition, you can find a lot of knowledge through this framework. But I really truly believe that you can still put words and explain the reason why you didn't enter a certain trade. Most people are just too lazy to do so. Okay. Is there any questions regarding that trade right here? I think it was a beautiful trade at the end of the day, pushed back down extremely aggressively. But if you catch your piece of the pie, it's all good. You don't need to find a 1 to 4, 1 to 5. If you find consistent 1 to 1s every single day, then you're good. You're doing the right thing. So right there, beautiful trade again that I saw. Why? Price creates a displacement candle. Okay, price creates a displacement candle to the upside, so I can mark out this first candle's upward. If that second candle displace, then I could be potentially, basically what I want to see is I want to monitor that third candle. I want to see how it opens. Does it open higher and then accept price above those 88s, 95s and closes strongly and then creates a gap? Am I going to be looking to short that market? No, that print, that 15-minute print will be bullish. And if wicks do the damage, body tells the story. And if the body is green, I will not try to short. Okay, so here I want to see if we can close back and fail to accept price over 94. Okay, which is exactly what happens in this case. So then, do we have an unfilled gap right below me? Yes, we do. So if we do have an unfilled gap right below me, then my framework is being respected. So now, and only now, I can scale down to the 1, 2, 3, 5 minute chart to find reasons why price should go back down. So now I have 3 entry models that I always look at, and it's the breaker block, high, low, higher high, lower low. I will enter here, basically predicting that we're going to create a new low. I have price pushing to the upside, creating a low, high, lower low. Waiting for price to pull back towards this retest here, zone, so this order block to create a new low, to create new lows basically back into the unfilled gap. Okay, then the V signature, so price pushes to the upside without creating any sorts of structure, but creates a gap. We disrespect the gap, and you see price going lower. Okay, so this is another thing that I'm going to be looking at. All 3 of those patterns is basically the only patterns you can see on a reversal. Okay, you're never going to see any other patterns on a reversal. And if you see something else than that, make sure to at me right now, because I've never seen it. Okay, the only one would be let's say the head and shoulders, but it's exactly the same thing as the breaker, but just having accumulation before you're sweeping, you're basically before you're breaking below the last series of down close candles before the bullish sweep. Okay, so here, do you have the right structure on the 1? Of course you do. You have a high, low, higher high, and you disrespected that low here, so lower low. And then you also created that inversion fair value gap. You could have potentially entered here predicting that this was going to happen. Okay, but the more you predict, the less chances you have of basically winning your trade. So here, really good opportunity on the pullback towards this level. Watch out for the sweeps. This is why sometimes I like to have my stop loss a little bit wider to let price do its thing. And when we create an internal high, I'll trim it back down. You can see that on when I post my analysis, not necessarily my analysis, but when I post my trades on Instagram or my short forms. Usually I have a wide stop. I know price has a lot of chances of hitting my target. I know that. My backtesting is telling me that. My journaling data is telling me that. So I just do not want to get stopped out to the tick of a trade that is still valuable and is still respecting my overall framework. Okay, so here, putting a sell limit right there. When was that? Thursday. Damn. And then price goes back down, fills this internal gap. Really beautiful trade here using the same exact framework. Okay, so then we have yet another opportunity here on the unfilled, which is this one. Okay, price is displacing to the downside extremely aggressively, failing to close below the second candle's low. Okay, so now I know I have an unfilled fair value gap right above me. What does that mean? Sellers were so aggressive that those buyers here didn't have any fair exchange here. So now we know we could potentially use that zone as being a magnet and look for signs of weakness from those sellers, look for signs of aggression from those buyers. Okay. What is happening on the chat? I don't know what's happening on the chat right now. All right, bro. Do you have any other thing? How much time do you have in your life to do that? Bro, lock in on your goals, bro. Oh my. Um, did you like Nick SketchUp? To be honest, I didn't try it because if I tried it that morning, I would have absolutely, absolutely puked. 100%. There was literally zero chance of me doing that. Like I was still recovering from the previous days. I couldn't. All right. So now again, look at this 15-minute chart telling us that price is most likely going to go higher. Use a higher time frame candle that will tell you the likelihood of us expanding to the upside. You know that right here, the likelihood of us creating a bullish candle on the next 15-minute cycle is pretty likely, okay? Rather than us going back down and closing aggressively below lows. Then use this time frame right here. Use this candle that is literally showing you that it's failing to close below the previous candle's low, and you have a target above you, you have a reasoning behind why you should go long right now and why you should scale down to the 1 minute chart, and something that is repeatable in the long run, not just we swept a low and we shifted on the 1 minute chart. Unfortunately, this is not enough. Okay, this is not enough because it's too subjective. Price will always sweep lows on the 1 minute chart and it will do literally anything that it wants. It's really hard to time the market. This is the timing is the most important thing in my opinion. And right here you can time it because you know you have a clear target, you have a clear framework, and you also have a clear stop loss, well-defined stop loss. So here, let's find a reason why you should enter this trade. You have exactly what we call a breaker. Low, high, lower low, higher high. So now all the zone needs to be used as your level of support in order to create new high. Okay, so here the entry was definitely on that neckline on the pullback. Okay, so here you go long, stop loss right below the slow, take profit right here, 1-to-1 risk to reward. And you guys see in 1, 2, 3, 4, 5 minutes you hit your target. Okay, 5 minutes you hit your target. This is exactly what you want to see. This is exactly the type of trading that will make you, in my opinion, mentally healthy. Okay, getting those base hits, those jabs, that's how we call them, those jabs are extremely important for you to build confidence, know that what you're trading is not luck. Okay, if you can repeat it every single day, jab, 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 and after 3-4 months of jabbing, you're like, damn, I'm really good. Now you have the confidence to scale, and now you have the confidence to buy more accounts. You have the confidence to actually make some damage to the market. Okay, we usually talk about, oh, you need a lot of capital in order to make a lot of money. Yes, but you don't necessarily need to change your approach or change the way that you trade in order to achieve those kind of results. Okay, this is extremely important to understand. It's not the strategy that someone else has used is not the reason why he's pulling in that amount of money. How he manages the strategy, though, is extremely important. And for me, I know that my trades are usually those kind of trades where I go for a 1-to-1, I go for a 1.2-to-1. My target is clear. The reason why I enter the trade is clear. How I manage my stop loss is clear. And then when I see that the market conditions are really good and the market is meeting with my edge, now I can start scaling up. Now I can be confident. Now I know I'm going to be in a month where I will potentially make a lot of money. But it's not all the months that will give you $20,000, $30,000 months. Even for me right now in November, it's not that good of a month for me. Okay, I'm literally up around $2,000 per account, which is not much compared to what I had in the previous months. But I know that this is needed in order to trade my edge. This is the fee that I have to pay in order to trade my edge, because if I don't pay that fee and I try to go and go find another strategy that will most likely not work first, but also has a huge learning curve, I will just shoot myself in the foot and postpone my profits. Okay, with your strategy, with your style of trading, did you find yourself not finding many trades when the market has a trend day? Really good question. The market will always give you an opportunity if you scale down a time frame. If you're looking at the 1 hour, of course you're not going to see a lot of opportunities intraday. If you go on the 15, there's some days that will not give you a lot of opportunities, but you can always scale down to 5. You could always find some sort of reasoning on why you should enter a trade back towards an inefficiency. Okay, there is always going to be a fair value gap on the day that will get created and will get pulled back into. I swear on everything I love, we could go on every single day. The market will create a gap and will pull back towards this gap and will give you 10, 15, 20 handles every single day. Can you find the right one, and can you stay can you stay patient for the right one first, or how are you going to react when that good opportunity will fail you? Okay, and it will not always work out. It will not always give you 20 R's on the month, but if you can consistently make 5, 6, 4 R's in a month, basically, you're outperforming 95% of people. So here again, another good opportunity. Really, this one looks so good. Create a bearish, even here, okay? You create a bearish gap. Sorry, here it was bullish. You create a bullish gap. This candle fails to close above the previous candle's high. Look at what happens right after. We go down to fill this gap without sweeping this high. This is how you can find your trade. Then same thing right here. Price creates a bearish gap, fails to close below 30 here, 230, which is the previous candle's low, the second candle's low. What is price most likely gonna do? It's most likely gonna expand bullish and close bullish on the next candle. This is how you read the chart for me. With my knowledge, this is how I read the chart. Wicks do the damage, body tells the story. So here, I was able to predict one singular candle on the chart, and knowing that this candle has a big likelihood of printing to the upside, and I know that every single bullish candle creates the low first before flipping above the open and accepting price above the open and then closes, I could enter on a downtick of a future bullish candle. Okay, so this is exactly how I can find those kind of trades. And the 1 minute chart is extremely important, but it's not as important as you guys think. Okay, I will say if you really want to learn stuff on the charts, make sure you're really focused on the higher time frame, really focused on how those candles are closing, how they are opening, and what is the likelihood of the next candle printing to the upside or printing to the downside. This is really what's going to make the difference. Okay, so let's see here, let's play a game and let's try to find where that next candle will most likely print. Okay, just based on the previous one on the 15. Okay, so here, bullish, for me, if the candle closes bullish, I don't have any signs of that next candle going to the downside. Okay, so if it closes bullish, I'm like, all right, there's buyers. Price will most likely go back to sweep this internal high. Okay, 15-minute print, closes bullish, all right, boom. Same thing here. Price closes above, the buy side closes strong. I would want to see price going here and feeling this high. Okay, inside bar candle, this is an accumulation candle, still didn't sweep this low. We have more chances of seeing this high than this low. Same thing here. Don't short the market. Right here though is a good moment to potentially short the market. Let's see what happens. It fails. Unfortunate. Okay, but here, does that mean that when price does that, you basically did something wrong if you took that short here you had an unfilled gap, price failed to close above the previous candle's high, you had the right structure and it failed, it's all good. Go to the next and find the same thing. Bro said I knew it failed. This is why I did that. But when a bullish candle closes, you have a big likelihood of seeing the next candle do the same thing. Okay. Right here, same thing happened. This one failed. This one worked though. Swept the previous candle's high, failed to close above the 72 here. So the second candle's high, and you had an unfilled gap right below you. What happens? You fill the gap. Okay. But does that mean that price, you need to change strategies because price failed in this scenario and didn't fail in this scenario? No. Find the reason why price actually failed in this scenario. Do you need a daily bias for this strategy? No. Your bias is the time frame you're looking at, basically, to mark out the gap. So here in this case, if you're looking at 15-minute fair value gaps, unfilled fair value gaps, then you want to be getting your bias from the 15. Okay, then you want to scale down to the 1, 2, 3, 5 in order to find a potential trade opportunity. It's really great learning. Basically, slowly and steadily going is the key, and trades which makes you comfortable. Yeah, just find a trade that is repeatable, that you know you can find every single day, that tells you a pretty decent story and consistently provides you 10, 15, 20 handles, and then scale, find reasons on why price goes and runs higher or runs lower. Find when it's lower probability to trade that system. Find when you should double your size potentially. Exponential bet sizing. There's a lot of things you can do in order to, get better or make a system such a valuable system to trade. What are the numbers on the particular setup, Moss? When candle fails to take out the low or a previous bearish candle, what are the chances it now takes out the previous candle's high before a new low? This is exactly what I'm saying. It's like, you can study that. This is why backtesting is so important. So when a certain candle is showing you a story and it aligns with the 1 minute, it has a bigger likelihood of going in the direction of how the candle is printing. Basically, let's say here, okay, we broke out of that range, and that candle is extremely bullish. Okay, when I see this, I'm like, all right, if the next candle prints, okay, I know there's going to be a lot of buyers potentially inside this print. I know it will be hard for me to just try to catch the reversal. Playing it off of the 1 minute chart only is extremely hard. So this is why I base my trading off of candlestick pattern on the higher time frame. I want to see how we react from those points. So the previous candle's high and also the first candle's upwick in this case, since we're bullish. And if we create that gap though, this is the moment where I'll be extremely confident in the fact that we have more chances of filling the gap than the internal high. Is it going to happen in all cases? Not necessarily. Okay, sometimes price will do this and will open on you and you'll lose the trade. But here, losing a trade doesn't mean you necessarily did something wrong. Okay, it's just the statistics of your edge. If your edge has 65% win rate, but with a 1-to-1 risk to reward, you're making money. Okay, trying to chase, I would say, perfection in a system sometimes will bite you. Okay, I would say the best systems are broken systems in a sense. Let's say the best systems this year are not necessarily the best systems of 2023. Okay, the best systems of 2024 are not the best systems in 2025. So this is why not every single month you can make money in this market using your framework. There is some times where you will need to survive in order to understand what is wrong with your system right now. Adaptation is a big part of your trading. Okay, this is a dynamic market, not a static market. Okay, so using a static approach, so a static edge in a dynamic market, it will provide you some returns for sure. Okay, depending if you have a good strategy. But what will happen is that you will miss out on a lot of profits from if you're not uh, if you can't adapt well enough to those market conditions. So this is why it's important to, when you have a framework, don't get stuck to the same kind of entries and same kind of reasoning all the time. Okay, of course you want to base your trade off of that, but if you lose, make sure to journal it, because maybe you will change the way that you enter in 2 months or 3 months. Okay, depending on how the market is reacting to your levels. If it's always opening higher, sweeping, let's say, I will say this, let's say, let me find the scenario. Let's say it does that. All right, let's say it does that on the 15, and then you see that price always does this. Okay, you're taking back-to-back losses and you just can't seem to get a winning trade, and you always see that price as soon as it creates this, and you want to target that internal fair value gap here. What it does is that it opens higher, sweeps that high, and then goes down. There is market conditions that price will always do that. Okay, and if you're still entering back to back inside this range, you're gonna get smoked. At a certain point, you just need to stop. Okay, read what the market is telling you. Is there any questions regarding anything psychology? I think we went over all the best trades of the previous week. Shit. We went mostly through all the best trades of the week using this system. Of course, not every trade is going to be a winner, but the most important thing is coming into every single day with the same framework, same exact framework, and no matter what happens, stick to it. Okay. So no questions. So what we'll do is that we're gonna do the 50K growth account giveaways. So okay, we have 60 likes, which is exactly the goal. So we're gonna do okay, a number. I'm gonna have to pull out my phone here. All right. So I'm gonna have to from the chat here. All right. So we're gonna do a number from. All right. First number will be from 400 to 500. Let's go. 400 to 500. All right. So we have a winner. Damn, it was fast. It's 467. And two back to back. Damn. Back to back. So Corb Trades wins the first. Shit. That was unlucky. That was so unlucky. So Corb Trades wins the first. Okay. Corb Trades win the first. So make sure to have your email in your YouTube description. Are you here, Corb Trades? No, you didn't win, RV. 467. You guys both typed it at the same exact time. Let me see. Let me just confirm. Yeah, he write it just before you. Oh my days. Man, I feel so bad. I feel so bad. They literally wrote it at the same exact time. Oh my. You know what we're gonna do? Damn. Yeah, I'll just give I'll just give each an account exactly like Edner Richie said. It's just too unlucky right there at this point. They both wrote at the same time 467. What are the odds? And bro was like, "Let's go." Yeah. If you guys don't mind, I'll just give those accounts to those two guys. It's just too unlucky. I just feel too bad. Yeah, we'll do it that way. It's gonna be better. I don't want someone to get pissed and be like, "Yo, I write it down." Mm, right. So the two guys is 467. So um it's Corb Trades and Group RV. So good job guys. I just don't want to be unfair. That's just yeah. Same person? No, they're not this. What do you mean exactly? Now they just got the same exact number at the same exact time. So 467. So we're gonna give them both an account. All right. So congrats to the people who won. Make sure to have your email in your YouTube description. Nick's gonna send you the accounts. So much love, guys, again for showing up in those backtesting sessions. I know Monday night, small week, finishing the week Thursday. So yeah, Wednesday. There's not gonna be any trades on Thursday or Friday. Okay, no trading days. So knowing this, don't be make sure to have some time off of the chart. Okay, it's really important. Yes, it's really nice to backtest and stuff, but make sure to have some time off of the chart. Make sure to have a healthy mind. Really, really important. So much love, guys. I appreciate you guys so much for showing up and being there for this backtesting session. Much love, and I see you guys on the next one. Peace out.